for tuning in. I'm going to continue on with Mike Maloney here as I will do the intro in a sec. I didn't know anybody was here already. Crypto Bob, thank you so much for tuning in. Sean Crothers, welcome in, my main man from Maine. So thank you for tuning in this midday market report. I want to play this and then we'll continue.
Again, that nudged up prices. The other big bucket is on the demand side. So people demanding or wanting more goods and services than there are available. Sometimes economists call this an economy overheating.
So if you want
Straight Six and Joshua, welcome in. I'll get to everybody after this.
something and you want more of it, economists deem that bad and they call it overheating.
Thank
if
you, Crypto
want more
Bob, for that.
stuff
Thank you so
and
much.
prices are allowed to remain free and interest rates and so on, then what will happen is the price goes up temporarily, more people get into that business, and the people that are already in the business start producing more, which creates more employment, which creates a better economy, which means there are more people that can afford more stuff, and everybody's standard of living keeps on going up. But watch the solution that they have for people wanting too much stuff.
Or running hot. So what can governments do to ease it?
What can governments do to ease it? They can keep their big fat noses out of the situation.
Well, first, it depends on the source of inflation. But the broad idea is that governments want to bring down price increases to a manageable and stable level, both for businesses and consumers. Let's start with the demand side. So governments, through their central banks, can decrease demand by increasing interest rates.
So they can decrease your demand for goods and services, in other words, your total prosperity in your life, because your prosperity isn't how many units of currency you have, it's how you get to live, the food that you get to eat, the health care that you have access to, and the shelter that you have, the kind of car that you drive. Your prosperity is all of the goods and services, the stuff in society, not the units of currency. So their answer here is, if they think an economy is overheating, if they think things are getting too good, is to take some of your purchasing power away by raising interest rates. Now, who is charging the interest rate? The counterfeiters, either government counterfeiters or commercial banks that counterfeit currency into existence with a loan that you are taking out. If the interest on the real estate loan goes way up, you can afford less house. So you don't get as much for your currency, your effort that you have put in, all those hours that you worked to try and buy a house, it now buys less because the counterfeiter is taking a larger cut of your total purchasing power.
Okay, so I'm going to stop it there. If you want to see more with Mike Maloney, please take a look. He's got over 700 and something thousand subscribers. If you want, he does gold at goldsilver.com, but give him a subscription. So good early afternoon, 1:38 p.m. Eastern Standard Time on this Friday, October 6th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So I thank everybody for tuning in to the Midday Market Report. 9 people so far have decided to tune in. I greatly appreciate that. 6 likes so far. Make sure to hit that like button, as it will greatly help push us through the analytics. And hopefully in time, we'll have more people tuning into the Midday Market Report. Some days are not as special as other days. Some days we don't have as much conversation. So we'll just see how it goes. We'll play it by ear. So with Dow, I believe we're in a broadening wedge, and we'll go through this super quick today because it doesn't seem like we're going to have a lot of conversation. 33,906. Within this broadening wedge, I think we're looking for a rejection possibly, and that's why that 33,906 is important, unless we get rejected at the 20-day here in the 4-hour time frame. That could reject us at right around 33,500, and then that would cap any upside. But as of right now, it looks like it'll probably try to come back up here. We have a death cross in the 4-hourly, so we'll see exactly how this plays out. But to me, looks like we've created a broadening wedge here. We've had a couple hits over here, so you need 2 hits on each side. So technically, we've already confirmed this. Darren White, welcome in, mate. Member for 22 months in Tom's Army. Holy smokes. That is super impressive. Matt Hoyden, welcome in. Thank you so much, Darren, for that. I greatly appreciate it. So if we look at this, that's awfully impressive. He's only 2 months away from the 2-year badge, the 589 badge on the moon. Everybody said we're going to $589 by the end of this year. I said 0.589 cents, and I made a 2-year badge to commemorate it. I started in 2021. So, and look where we're at. So this looks like we've in a broadening wedge. I believe we're in a broadening wedge. I appreciate that, Darren. I greatly appreciate that. You have no idea. But I think we're in a broadening wedge in the Dow Jones, and I think it's pretty indicative of what we've already done. So we could come up here to reject to come farther down, but we technically don't have to go all the way down. We could use this as a support and bounce back up. It's just in a broadening wedge, it goes support, resistance, back to support, and then the next one should be that big burst. So we'll see. The DXY is at 106.10, continuing to retrace as we talked about the last several days in the midday market report. It's around the uptrending support in this rising channel. And we talked about if we're going to maintain support, first chance to hold, and I said I didn't make the rules, would be at 105.90, and we've come down here. The next chance to hold would be at the 200 day. However, if you hold the 105 spot like that 13 or 105.20, that for the DXY could allow a breakdown, and then if you do that, if you get rejected here, it's over, and then you have a huge breakdown. I'm not so sure they're ready to just let it die just yet, but we'll see, because now they're going to need a huge rally back up. So we're going to see what happens with the DXY. Watch that 105.90 very closely. If it breaks and we go down to 105.20 and come back up and get rejected, this is over. US 10-year is up 1.34% or 6 cents. 4.78% is the 10-year government bond. As we know with the government bond, we're on this cup and handle formation, and we're just pretty much waiting for this to do what it needs to do. We're anticipating a move to 5.07%. It's very close. And then there's a 58% chance that we can get on top of that and continue moving up. But that remains to be seen. We've upped it a little bit because nobody wants the government bond, so I upped it from 50 to 58% yesterday because there's simply no interest. Nobody's interested in a 10-year government bond when the 6 month, I believe, just went over 5% today. So who the hell is going to take it out for 10 years at 4.78%? If you can take it out for 6 months and you get like 5.03%. At least that's where it was earlier. I know it went down a little bit. Crude oil down 0.10%. Just pay attention to that with the government bond. U.S. oil, crude oil, had a little bit of a rally, but since pulled back. But remember what we talked about yesterday. This pullback to possibly all the way down to as low as, I believe it was $77. Our first chance to hold in the daily. We've come down to the 200-day almost to $80.86. On the weekly, we came down and we hit the 20-day. So that's the golden cross in the weekly. Well, not a golden cross, but it reconfirmed that golden cross. And now you're coming down to see if we have support there. I still think it's an 85% chance after this dump down, as we talked about. We talked about this from up here. So anybody who's coming in day after day after day, I appreciate it. KB, exactly. And I'll get to the other comments when somebody else comments. But I think there's an 85% chance that we come up into this range of about 109. You could come up to 123 or 113, but at least 109, I think there's an 85% chance, in my opinion. So that doesn't mean it can't break down, but this retracement was imperative. It was paramount for this finishing move up. That's why I had the retracement. So I know it needs to happen. You need further consolidation sometimes for the continued move up. So, and I'm going to have these on here, and we're going to talk the same way for weeks as these patterns play out, and it's a beautiful thing watching it unfold day after day and being on top of it. The U.S. dollar, the gold-silver ratio is down 1.89% or $1.64. We've been talking the last several days of how good of a deal it is. Of course, we needed to get rejected here. This is why we talked about the $86.68 here. Hey, thank you, Darren, for doing that. Khan, welcome in. Good afternoon. And I do not make the rules. Thank you so much for that, KB. Spot on, Tommy says. Darren, I appreciate you doing that. 23 people here now in the midday market report. Thank you so much. If you want more people to tune in, you're going to have to do me a favor and hit that like button. That's as simple as that. Angela, thank you so much for tuning in, love. I greatly appreciate you being here. So much. And with the over 1 year badge in Tom's Army, what a spectacular show of support. So what we're trying to do here in the daily is we're trying to see if we have support here in the 20-day. That's at 83,915. We came up perfectly in the structure to where we need to retest and see if we have support. We don't want to lose where I just showed you, but I mean, it could get rocky if we do lose this daily support, because you don't want to come down any farther than 83.95. So watch that on the gold silver ratio. It doesn't mean we have to come down there. In the 2 hourly, we still have support. Well, now we don't. Well, I guess we technically do. We haven't come through the 200-day yet. So 84.20 right now could stop you before coming to the daily, but I wouldn't expect that. I would just consider looking at the daily and hoping that support holds. Otherwise, you could consolidate farther down. But right now, the gold-silver ratio is at a fantastic ratio. We're just trying to see if we can push that 93 to 95 to 1 area. The gold is up 0.57% or $10, about $10.50 per ounce. Like we've talked about, we need to come up and hit this downtrending resistance now. That's why I put that down there yesterday. But we'll, or not put it down there, but we need to hit the downtrend somewhere. This is the technical target. Sorry, it's in the 2 hourly. I'm used to it being in a bigger time frame. But we do need to retest. Where was it at? Because this is telling us we need to retest. Okay, so gold, if the US dollar continues coming down, it's going to allow gold to run up to about 1870. Likely. It very well could. It very well could run back up to 1870, and that would put up about a $40 gain. B2 gold in the same way as gold's railing. B2 gold, as we talked about, more than likely going to have to either retest the 20-day, or if gold had a big retest, we could come back to 317. That's why you got to decide where you want to buy in or what you want to do, because this can reverse very quickly, and these can be wicks in the weekly. This looks like a J hook to me. I'm just going to call it how I see it. I still think there's a 90% chance we come down and hit $2.40. Now, if we do put an inverted head here, it'd be interesting. And then a 75% chance we come down to the bottom of the structure. That's what could be forming here. We broke a very significant uptrend here. That should support the further move down. But of course, you're going to have short selling. You're going to have short coverings, I should say. And all this other good stuff. So, and then silver, as we're rolling along through here, 27 people here. Make sure to hit that like button, as it will greatly outpush us through the analytics. So almost done here. Silver, $21.52, up 2.72% on the day. We're now doing the same thing as gold. We're having that reversal. So right now, we're trying to get back on top of $21.30. This is that 25% chance of how it doesn't come down there as well. You know, there's always reasons why it's not 100%, but we'll see. This could be the area it bounces back up here. It doesn't need to do it here. There was just a 25% chance somewhere it had to come back up and retest. This is where I thought it could do it, but if it does it here, it's fine. It would have to come back to that $22.50 range. If we get back in here and start rolling, then it's a different story, but right now we're looking overly bearish. These are just retests. The total crypto market cap, 1.074, up 1.71%. We've been talking about how it doesn't feel right. Feels like something has got to give here, and there's a chance that it should come back up here. It could retest 1.136, as this could be rounding the bottom for a cup and handle. Otherwise, if this is forming some kind of little right arm, that's some weird right arm, we could get rejected up here, and then you'll know if we start reversing back down. Then you'd have to come back down to 932. But right now, I'm looking more at the bullish optimism here. Bitcoin's up 564, or 2.06%. It's come back up and retest this downtrending resistance on this channel as we thought it would. That's what we were talking about yesterday, and we came all the way up here to retest it. Like I said, I don't make the rules, but when you understand the patterns, you understand that's the bottom of the broadening wedge expanded out. So that's how it goes. Made $800 in the last big candle. Excellent, Con. Excellent. Are they? They sure are beeping. They sure are beeping. Thanks, Dan. So we're trying to revalidate this invalidation of a death cross here. We need to come back through on another daily candle. But we'll see if we've got any strength. Otherwise, this rejection could bring us back down. You need to get back over 28,000 to start pushing up, and we're almost there now. We're almost there. As we know, with XRP, market cap needs to be over 28 billion to start pushing up. We could be starting to put in a hammer candle here. Right now it's a bearish hammer candle, so we're going to want to come up just a little bit higher to make it a bullish hammer, but that is a hammer candle, so we need to come up just a little bit higher. And then XRP, and then I'm out. 5240, we're right at the critical support level. And just like with Bitcoin, we could be putting in a hammer candle here, we'll see. But we do want to stay above 524 on the daily close day, and we want to continue working on that inverted head and shoulders, ultimately trying to get up to 62.5 cents. But that can't happen until we break above this first 54 cents and ultimately break past roughly 55 cents. It's about 54.85. But you don't want to lose the 515, but at all costs, you need to hold the 508. I'm XRP Future Millionaire. If you appreciate my work, hit that like button.